Hello.
Hi, everyone. Welcome to day 12 of CareerConnect at home and the second day of week 3, focused on dreams to dollars, startups, small business, and entrepreneurship. My name is Ashani, and today Dan and I will be talking about venture capital. There'll be time at the end of our session to ask questions, so please go to CareerConnect at home's Instagram page to submit those.
Dreams to dollars. Let's get started. Can you see my screen?
Yep.
Cool. So we're excited to be hosting all of you today. In terms of what we're going to be talking about today, we'll have a quick intro to Madrona Venture Group and explain what is venture capital, talk about how we make investment decisions here at Madrona, and then what type of educational pathways and career experiences our team has. And then afterwards, the more exciting part, we're going to be doing a reverse Shark Tank. So we're going to be asking yourselves to put yourselves in our shoes. You're going to hear 3 startup pitches from us, ask questions, and then decide which company you would invest in. Finally, we'll have a wrap up with some Q&A and hopefully hear some of your feedback on some of these startup investment decisions. So first, to get started, I wanted to thank all of you for coming today. Instead of wasting time on TikTok and binging Netflix, it's really good to be learning new skills at work and in business. And it's cool that you guys are all tuning in to something like this. So to get started, what we do is we work with small businesses to get them started, help them grow, and help them eventually become big companies. So in terms of what you need to start a business, I think a lot of people really get fixated on this first bullet here of the idea. So coming up with a great idea, like it would be so awesome to have flying cars. Yeah, that would be so awesome, but you also need a team of people, you need a plan, and then you also need money or capital to go and execute on that idea. So when we look at businesses, we're thinking about, is the idea good? Is the team good? Do they have a good plan to execute on it? And then the thing that we're most focused on is helping the people who have those 3 things, giving them some money to get going on starting a new business. So basically what we do is we make investments in startups to help them grow. So you can see on this picture, we have something like 70 to 80 portfolio companies, and some of them are really big companies that you've probably heard of before, like Amazon over here, or maybe Redfin that people use to shop for houses. But most of these companies, when we invested, they were maybe a team of 3 or 4 people, and they were still getting off the ground. So when we first invested in Amazon, I think it was less than 5 people working there, and now they have tens of thousands of people in Seattle. And going back to what we're talking about here, having an idea is great, but you also need to have the team of people who are going to come together to execute on the idea. You need a plan to go after the idea. And then most of the time, most of the time for companies that we invest in, those companies are looking to raise money from investors to go execute on this stuff. So how do we make money? Well, investment firms, we make money by buying shares in a company when it's small, and then hopefully down the road selling them when they're worth a lot more. So Redfin is a company I mentioned earlier. What they do is they help people buy houses. So if you've ever been to an open house, there's typically a real estate agent there. They're helping people evaluate the house, decide if it's a good price, and maybe help people make a transaction. And what Redfin does is they were one of the first companies to move that transaction to the internet. So you can go to redfin.com, see a map of all the houses, see how much it costs to buy all those houses, scroll around and see what the other recent transactions in a given neighborhood are. And then ultimately, if you want to visit that house, you can book an appointment with a Redfin agent, go visit. And then if you want to buy the house, Redfin can help you do that too. So when we met Redfin, it was a team of 4 co-founders, and this was back in 2005. At that time, the company was worth about $8 million. And we bought about 1.5 million shares of the company for 34 cents per share. That gave the company $500,000 to go hire more people, to build more technology, and to execute on their growth plans. Over the next couple of years, you can see here, the valuation of the company went from 8 million to 22 million to 41 million, up to their IPO valuation of about $1.2 billion. Today, one share of Redfin is worth about $26.30. So if you do the math on that, those 1.46 million shares that we got in 2005 for 34 cents, now if they're worth $26.30, that's $38.4 million that we made on a Redfin investment. Now, we don't hold all of those shares over that entire time period. We might sell some of them along the way, but that's how a venture firm thinks about making an investment and making money. So how do we make investment decisions? This is actually a table that we have in all of our investment memos, where when we meet with a new company, we have a pretty structured way about thinking, is this a good company to invest in? So I'm sure all of you have watched shows like Shark Tank, or you've heard someone who says, like, I have a great idea. I want to go do this thing. And maybe you thought like, I don't know if that's a great idea. Or you thought like, hey, that's an awesome idea. Well, this is the structured way that we think about, is this an awesome idea or not? There's a bunch of things here, and Ashani and I will go through some of them. But really the top things that we're thinking about are, is this a team that you'd want to back? Is it a market that has a big opportunity? So on the first one, on team, a lot of the times we're looking for people who have a lot of knowledge in an industry. So I think that a lot of the times when you read about startups on the internet or in books or see movies, one of the things is like anyone can go do anything, and that's totally true. But at the same time, if you have a team who has a lot of experience in a given industry, that gives them a big advantage in terms of knowing the market, knowing who the customers could be, and building a product that's really valuable. And that ties right into the market opportunity side, where when we're making investments, not only do we want people to know a lot about the market that they're going after, we want them to have a really, really big market, which means there's a lot of customers who could buy the product. When you think about a product like, let's say, electric skateboards, that's a really cool product, but not everyone is going to ride one. Electric bikes is a way bigger market because a lot of people already know how to ride bikes, and they're a lot more comfortable riding a bike. So we think about, for a given piece of software, for a given social network, for a given tool, how many people would be interested in using that? And then how much would those people be willing to pay? On competitive moat and competition, this is when we think about questions like, hey, isn't this kind of similar to this other product that's already out there? How are you guys different? And why would someone buy your product instead of someone else's? When you think about a company like Amazon, part of their competitive moat is that they have the largest selection of products. So you can buy electronics on bestbuy.com, but actually it might be easier to buy things on Amazon because they have everything you need and you can order it in one go. On business model, this is how the company actually makes money. So when you're meeting with a software company, the typical way that they make money is they're going to sell their software to someone. But how are they going to charge for it? Are they going to charge each time a user uses it? Are they going to charge a flat fee? Are they going to charge each time an API gets called? There's all these different permutations of how someone can make money off of their product. We're trying to help companies think through, do they have the right business model that aligns with their product and their market? On traction and go-to-market, GTM stands for go-to-market. This is basically saying how much progress have they made so far, and we call that traction. And then what's the go-to-market, which is how have they been doing in terms of finding customers and reaching the market that they're targeting. So going back to the Amazon example, in the early days, they were maybe selling, $100 worth of books a day. Now they're selling billions of dollars of books. But how quickly are they growing? Did they go from 100 to 1,000? Did they go from 100 to 10,000? We're looking for early signs that this could grow really quickly if they invested more money into it. I'll skip product market fit, but this is just a high level. Is the product something that resonates with the customers? And go down to valuation, terms, exit opportunity. Basically, we're trying to think about, sure, all of these things could be really good, but if the company is too expensive, it might not be a good deal for us at this time. And then also on exit opportunity, That's talking about eventually, could we imagine this company going public in an IPO and selling their shares to the market? Or would another company want to acquire this company? How would we eventually exit our position so that we can make money off of it? Finally, as an early stage investor, we want to make sure that we're helping our companies, and there's a better fit for us with the company if we're able to add value to them as well. So that was a lot of stuff to walk through, but we wanted to give you some level of framework, because the next activity we're going to get to is we're going to have a reverse Shark Tank, and we're going to pitch a few different ideas to you, and you'll tell us which ones are the best ones that you'd want to invest in. Before we do that, we're going to do a quick set of educational pathways and work experiences with me and Ishani. So Ishani, if you want to kick it off, it'd be helpful to introduce yourself, and I have a list of questions here that you can answer.
Awesome. Thanks, Dan. Hi, everyone. My name is Ishani, as Dan mentioned, and we work together at Madrona Venture Group in Seattle. I'm actually from Seattle, so I spent middle school through college here, went to the UW, studied finance, and I studied public health as well. Also went to high school in Seattle, and my favorite subject was actually history, followed closely by science. And so I don't think it sounds like I do a lot of those things every day, but I end up spending a lot of time doing research similar to what we did in history class, and investing and looking at a lot of companies in the life sciences space. So tying back to some of those interests I had back in high school. My first job out of college was working for a management consulting firm called Bain & Company down in San Francisco. And I worked there for a few years before joining the team at Madrona in January. I have not been to graduate school yet, and that was the only job I had before Madrona. And I think that's all so far.
Cool. And quick intro from me. I'm from Reading, Pennsylvania, which is about an hour outside of Philly. Happens to be Taylor Swift's hometown. I don't know her, but have driven by her house. My favorite subject in high school was probably math and science. My first job was actually working at the local Dairy Queen, which was a lot of fun. Made a lot of ice cream, but I wasn't very good at it. In college, I went to the University of Pennsylvania, and I studied finance and psychology. Both things I thought were really interesting, and then helped guide me to management consulting, similar to Ishani, where I worked at a company called where I worked at Boston Consulting Group. And I haven't gone to graduate school. So that's the quick educational and work experience from us. Okay, so now, unless there's some question, are there any questions that we should do now, Liz? Okay. So pitch number one, let's do it.
All right, this is a company called Peach. So imagine this for a moment. You take your first job out of school, and you have meetings starting at 8 a.m. They go all the way through noon, but of course, because you're really interested in this last meeting and people like to talk a lot, it goes a little bit late till about 12:30. So then it's 12:30. You had a breakfast, you had a cup of coffee in the morning, but had to skip breakfast because you had a couple meetings. So you're pretty hungry. But unfortunately, your next meeting starts at 12:45, and you haven't done the homework of reading the email that you should have read before the people show up for your meeting. So you spend the next 15 minutes, it's 12:30, you spend the next 15 minutes reading that email, you go to your next meeting, and then you have a bunch of meetings from then until 3 p.m. All of a sudden, it's 3 p.m., you're starving, and you haven't eaten a thing all day, and you're probably pretty irritable because of that. Well, what could have solved your problem is along the entire way, and the problem of that many Americans face every day is Peach. So what exactly is it? Well, Peach is a daily lunch service that delivers lunch from some of your favorite restaurants in the area to your door. There's no service fee, no tips, and no subscription commitment. You get it delivered conveniently right to your office, or even if you're in college and you have all these meetings and classes you're running in between, to your school. It can be for individuals, or you can order it for your group project, your whole team at work, or even the office. And all you have to do is reply with a simple text. So what happens and how does this work? Well, every day there's a daily menu that's sent to you via text if you sign up. And if you want to order peach because you're busy or you didn't bring your lunch or you forgot your lunch in the car or at home on the kitchen counter, well, all you have to do is reply with the dish of choice. We give you 3 options every day via simple text message. Then once your lunch arrives, we'll notify you via text and you can come and pick it up and it'll arrive right to your office. Finally, you just grab the lunch that you ordered, it's labeled with your name on it, and then enjoy in those extra 15 minutes while you read that email that you forgot about from the night before. Pretty simple. And even better, Peach actually benefits everyone that is involved. So for employers, they can even offer subsidized meals to their employees, making them happier and perhaps healthier than just having a cup of coffee in the day. The people who actually deliver the meals to the workplaces and schools can earn up to $55 an hour for each for driving during the workday. And then finally, for the restaurants that actually use Peach and put their meals on the Peach platform, this is super useful. They can get revenue before the daily lunch rush begins, and they get visibility into what orders and for what meals they'll have to make food for every day. And so you might be thinking, well, gosh, that's probably really useful if I go to the office, but no one's going to the office right now, and no one's even going to school. So what we've done is created Peach at Home that now offers home delivery, because it's not as if you don't have to go to class, and it's not as if those meetings are gone. In fact, you probably have more of both. So now Peach has introduced home delivery, enjoying freshly cooked food while supporting your local restaurant community and making your life easier. So set your home delivery address today and get food delivered from Peach.
Well done. Tough one to follow. So pitch number 2, this is going to be for me. And this is for a new venture called CrowdCow. So what we're doing, and this probably sounded crazy when Jeff Bezos said he wanted to sell books on the internet, we want to sell craft beef on the internet. So when you think about the opportunity today, a lot of people are eating more beef than ever before. So there's a lot of talk about vegetarianism and veganism, but when you really look at the data, sales of grass-fed beef are rising 40% a year, and natural beef and pork and chicken are all up a lot as well. And these industries are tens of billions of dollars. A lot of people buy meat. And not only is it beef, but people also want us to serve pork, chicken, and seafood. So the way that we think about this is we're trying to bring decommoditization to beef. What does that mean? Chocolate used to just be chocolate. There was Hershey's milk chocolate. Coffee just used to be coffee. But now you see $10 coffee bars at the grocery store that people can't stop buying. You see a coffee shop on every corner selling $15 lattes. And of course, wine and beer have been this kind of way for ages. There's a $20 bottle and there's a $200 bottle. It's really hard to tell the difference. With beef, it's easy to tell the difference. So instead of going to the grocery store and saying, here's beef and here are different cuts of beef, we want to bring the stories back to the farms that are growing them. So on our website, we partner with small individual farmers who are raising super high quality cattle. This one is an example of a farm in Eastern Washington, and we connect them to consumers. People want this stuff and farms need to sell their beef, but instead of selling them through the giant meat processing plants, we're going to sell them through our marketplace and help connect these great farms with local consumers. People already love the product today. This is just a sizzle reel, so to speak, of some of the feedback that we've gotten on our Instagram stories. But people love supporting local farms. They love knowing the stories of where their food is coming from. And not only are we doing beef, but we've got seafood with scallops and shrimp. We've got chicken selling out. And I think now we even have bison. So CrowdCow, we're seeking your investment and would love to hear your feedback on our product. Okay, do we have our third pitcher? Looks like it's going to be up to you, Ashani.
Well, now that I'm nice and hungry after that CrowdCow pitch, I'd be more than happy to talk about Boost Your Fuels. In case you weren't convinced by my pitch of Peach, we've got another idea for you. So think about this. on your way to work, now that you've forgotten your lunch on the counter, you also have forgotten to fill your gas tank. And you realize that you're late to work, so you can't fill it on the way to work, and then you might not have enough gas to actually make it back home. But you can't be late for that really important meeting, and it's so important that you actually forgot your lunch on the counter. So what do? Well, you call Booster Fuels. They deliver gas straight to you. We deliver gas straight to you at the lowest prices around. Basically, the whole idea is that everybody has to go to the gas station to fill their cars at some point, but they're inconvenient. They cost a lot of money to build a gas station, to continue to run it. Often you have to wait in line, even when you're in a hurry. They're not super conveniently located. And in fact, they're terrible for the environment. So what happened? So in spite of this, everybody still buys gas. Americans spend over $500 billion a year on gas. 99.5% of all US cars are gas powered. So while we hope that the economy moves towards electric vehicles, right now they're more expensive, they're relatively inaccessible, and it's hard for people to buy a new car. A lot of people have old gas powered cars. And even more importantly than just people and consumers, fleets like the post office or the Amazon delivery vehicles all buy gas every day. So this feels like it's pretty problematic. And what Booster does is Booster helps is a company that's designed to make money and save you money at the same time. It's 3 times more profitable than gas stations. It delivers gas straight to the car. And while gas stations cost $3 million to set up and continue to run, we at Booster spend only 2% of that. And importantly, our prices adjust in real time, and they're always the best because we gather data from all around and are able to then bring gas to you at the best price. So you don't have to go around searching for a good, accessible, affordable tank of fuel. So in sum, let's rip up the gas stations and put sustainable parks into place of them. You'll never have to wait for gas again. And we also have the coolest trucks that deliver to you. You can see the photo here. So with Booster Fuel, would love your investment, and let's build something cool together.
Awesome. Thanks, Ashani. So now's the fun part. Go check out CareerConnect at Home's Insta story, type in your investment choice, bonus points if you share the reasoning behind your decision. We've got Peach, that's lunch delivery, Crowd Cow, selling meat on the internet, and then Booster Fuels, gas straight to your car. And we'll be open for questions. Let's see.
There are a couple questions here for us. I think one that we can answer is, what does your average day look like in your roles? Well, I think almost everyone will tell you that there's no such thing as an average day because it does change quite a bit. But there are a couple of things we do most frequently. Between the two of us, we spend a lot of our time on 3 or 4 different areas. The first is looking at new companies to invest in. So kind of doing exactly what we just did now, which is hearing entrepreneurs pitch their ideas of different companies, whether that's food delivery service, delivering gas to your door. And we talk to them and try to what we call diligence them if we were excited about the idea and the entrepreneur, dig a little deeper into the business model, and all those things that Dan mentioned on market size, product market fit, et cetera, to better understand whether the company would be a good one for us to invest in, but also if we'd be able to help them grow and ultimately make it down the stage that Dan was talking about with Redfin to IPO. Then once we've invested in companies, we do spend a lot of time doing just that, which is helping them and working on projects with them to expand, whether that means doing some market research for them and connecting them with the right people to join their team, et cetera. We spend a lot of time helping them grow in whatever phase they're in. And then we also do other projects for the firm. Dan and I are doing a research project right now on what the future of work looks like, especially given the environment of everyone working from home. And a variety of other projects that help the firm better understand the different investment environment and landscapes around us.
Cool.
Dan, there's a question on, have you ever invested in a company that didn't take off and what happens then? Do you want to talk about that?
Yes. Sorry, stopping the share. Oh, easier to see the questions this way. Have you ever invested in a company that didn't take off? What happens then? Yeah, so different types of investors have different types of models for what they're looking for when they're investing. There's some types of investors that want to make sure they never lose money on any company, and they only want to invest in very established companies that are very predictable and they think are going to grow more slowly but have less risk. In our business, a lot of the times these companies are just an idea. It might literally be the slides that we just showed you. That's the only thing that exists today. So there's a lot of those that don't take off. In general, across venture capital, about a third of companies that venture capitalists invest in fail. About a third of them don't return more than what we invested into them. And then the last third are where all the big successes are. So the way that it typically works for us is on the third that fail, it's tough, but typically there's not a customer need there, or they weren't able to grow successfully. In the third that return their capital, but not too much more, they're able to find something, but never really find that breakout growth. And it's that last third that venture capitalists are really focused on. That's the Amazons, it's the Redfins, it's the Google, Facebook, Microsoft type investments, where if you invest in one of those, that pays for more than the third of the losses that the investors sustain. And people are really excited about investing in companies like that. So the ones that don't take off, like it's typically, we're not investing in any company thinking that it's not going to take off. But a lot of things have to go right for a company to start from selling books on the internet to becoming a giant marketplace for everything and hosting all the infrastructure for most startups and websites. So that's how we think about it. Do you want to take the next one, Ishani?
Yeah, I can do that. There's one question here around what does success look like in this position and how do you measure it? Well, go back to the think about the chart that Dan showed with Redfin that it started at $8 million valuation and ended up at over $1 billion in value. But the x-axis of that chart showed how long that took. So Dan mentioned the success that 1/3 of companies end up being a resounding success. That often is the metric that venture capitalists use to evaluate is how much money is returned for what you invested. But it does take a long time for that to happen in most cases. I think on average, the venture capitalist investment to exit is on the order of 10 to 12 years, a 10 to 12 year period. And so it takes a really long time to understand and measure success, but going about it along the way and keeping up to date with your companies, as well as understanding the valuations in between of that from 8 million to 1.2 billion, I think, at IPO, there's quite a bit of progress along the way. So continuing to monitor that success and the positions and valuations is also how we measure it.
Yep. There's a question around what classes should we take in high school so we can follow these career paths. Oh man, I don't even remember what classes I took in high school. I think in general, if you want to be working with technology companies, it's helpful to take more things in the math and science fields. But really, I think a lot of it's about what you're passionate about. And there's other types of investors who don't necessarily invest in technology. So I think just telling everyone that you should go take computer science isn't necessarily the right thing, but that's definitely a great career path, and it sets you up for things like building things as an engineer, investing in things as an investor. And one of the cool things about computer science and technology is that even if you don't love computers, even if you love fashion, or if you love food, or if you love transportation, all of those industries are being revolutionized by technology. So you can work in whatever industry you want and still take those technological skills and apply them. Cool. Do we have any questions about our startup pitches? Do we have any results coming in from that? I'm trying to grab my phone to look at the Insta story. Oh, okay. So apparently you're going to be voting after the session. Got it. Do you want to answer this question around how have business operations been affected by COVID, Ishani, since you've done a lot of work there?
Yeah, absolutely. So a couple of things here on how business operations have been affected by COVID. One is that Madrona has been really in tune with this. As Dan mentioned, we've put together some what's called a back to work toolkit and really tried to interview businesses in the Seattle area around how they're handling operations and what's changed and what's not. What we'll say is that it depends. The answer to this question is really that it depends on the nature of the business itself. Some businesses, stores, retail stores, or businesses that were all in person. For example, Barry's Boot Camp or Soul Cycle, which are fitness studios that are in person, really were dramatically affected by the COVID situation, and a lot of their revenues went to zero. The same is true of brick and mortar stores that only have a physical presence, and so this is a really tricky time for them. My friend actually works for the bookstore down the street, and they've been closed for the past 2 months. So they've been generating no revenue, and nobody's been at site. So business operations have been affected really dramatically. What's interesting, though, is that that's not the case for everybody. There are a lot of businesses that were built either completely or even partially online. And so some of those businesses have been really thriving and generating a lot more revenue than maybe they previously ever would. So a couple of good examples of this are an online fitness streaming app. There's one called Aptive, which a lot of people have started using because they can't go to Barry's Boot Camp or Soul Cycle anymore. The company that Dan mentioned and pitched called CrowdCow is actually also doing really well because people aren't going out to eat as much at restaurants and are doing less takeout. And CrowdCow is encouraging them to craft beef at home and actually start cooking it. And so CrowdCow has seen sales pretty dramatically increase over the past few months. So, the sum of that is that business operations have changed really dramatically differently for a lot of different types of businesses. And one thing we've noticed is that companies that are able to be technologically really nimble and adapt to the situation are in much better position. So companies that either already had apps online to purchase their goods or services, or that were able to pivot quickly and build an online presence, have started to do really well and take advantage of the fact that we're all virtual. But other companies haven't been able to do so, especially if they're smaller businesses. So I think there's definitely a lot of nuance to that question. But then, we're all on Zoom right now. And so Zoom is another example of a great company that the vast majority of people are starting to use now because we're all remote and we're forced to use some kind of video conference. So that's another company that's done really well in the process.
Yep. So I think there's one more question on what the work atmosphere is like for us, and then I think we can wrap it up after that. So the work atmosphere for us, Shani and I, we typically work in an office downtown. There's about 30 people in our office. Most of the time we're working on teams, but we also have a lot of individual work. So for any portfolio company that we've invested in, or for any company that we're thinking about investing in, we'll form what we call a deal team to look at each individual deal. And that's probably going to be 2 or 3 people, maybe 3 or 4 people, and you're going to work really closely with those 3 or 4 people on doing all the research on the company, understanding the competitors, figuring out how big the market is, getting to know the team, doing all of that kind of stuff before we make an investment decision. And then after we make an investment decision, that same team typically continues working with the company thereafter. So the work environment is really fun because you get to work on teams with different people in the office. And you also get to meet a lot of people who aren't necessarily at Madrona, who are at other startups locally, who are at startups that we've already invested in. And you get to meet a lot of people who are working on interesting, cool, new companies and ideas. So that's the high-level summary on what the work atmosphere is like for us. So I think that's it because we've gone through most of the questions. And so thank you again for joining us today. Come back tomorrow for a session with Mod Pizza to learn more about how they run a successful business with social impact. Thanks, everyone.